Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market kind of held, chopped around, moved down a little bit early in the week before the holiday, and then moved sharply higher as we got past the holiday. This shortened week had some pretty good action. Investors early on, without really selling the market very hard, seemingly were unafraid of the looming trade war, and they held, maybe thinking that the trade war might not really happen, that something would happen before the Thursday deadline. And then now, as the market rockets to the upside here on Friday following Thursday's rally, maybe they're thinking that the trade war won't last or that it doesn't even matter. The way I see it is that, President Trump is kind of in a battle with himself. The benefits of the tax policy being offset by the drag that is going to be created by this trade war if it does actually hold and does escalate as it seems that it's going to do. Also, not much what's talked about right now is the strong dollar as the Chinese yuan collapses, and there's a growing disparity between the interest rates in the Eurozone and the United States. Just a massive disparity when you look at the 10 years, which in Germany is below 30 basis points, and here in the U.S. is up around 2.8. So that's a very large disparity, about 2.54% right now. And with the Eurozone still dragging their heels, and that central bank not wanting to do anything very aggressive, and our FOMC seemingly aggressive, that's going to bring the possibility of a much stronger dollar, which we're looking for later in the summer. That's going to add pressure on the sale of U.S. goods, already subject to slowdown all over the world, really, with this trade war going on. And that's ultimately bad for gold, and ultimately it will be bad for the stock market. Still, stocks are moving up and have overperformed our analysis, and it's been that analysis based on historical cyclical patterns. So the market, we believed, was going to have a deeper correction than it did, and now we have the low-cap stocks still driving the market to the upside. That certainly has helped the market, and now, here on Friday, it certainly looks like there are short squeezes going on around the world. Yes, we had some anticipation that the trade war would bring some declines in the markets, and certainly traders were leaning in that direction, as we could see. You can use soybeans as a classic example, or maybe even coffee, which are having massive updates today, 3-4% on the upside. And that soybean move comes at a time when China says they're done. They're not buying our soybeans now because of the tariffs, this trade war, and soybeans jump 30 cents. So that's very typical of short squeeze type action. And even though the market has escaped this window that we thought that the market would have a sharper pullback, we're still in the final stages of that, and it's likely that we're going to see some retreat after this, what I think is a short squeeze going on right now. But outside of the risks that we see in the next week or two here, really the time is passing. We have talked about the window for this corrective period to come only into mid-July. And I'm going to show you that right now it looks like July 16th to 20th is about the point where that window closes. I'll show you that in the short-term view. We still believe that that this summer is going to see a little better period coming up here from mid-July through maybe into September. So this period of correction coming near an end. And then we think that we're going to get into that favorable period. And we think it's going to be led by the banks. If you look at our analysis, our members who get our charts, you'll see that we're expecting bottoms coming in play in Goldman Sachs and Morgan Stanley and the XLF, the financial index. Those really look like they're going to be the leaders in the next rally. So we think that this brief couple of month period that I think is coming ahead of us for a better market, we think that's going to be the end of the 9-year bull run that we've had. But still, the window is probably there for this better market. And we really want to look at the financial stocks during this period as the ones that are going to lead. Take a look at the likes of what Apollo Group is doing. These are money managers, and that's why I like Goldman Sachs and Morgan Stanley. And thinking that they're going to get a pretty good bounce coming up here. So financials probably the leaders in a little better time period that we're looking for the market outside of the next week or two where we still think there's risk. Let's take a look at the stock market on the 60-minute chart for the last week, the gray area being the area of overnight trading, and the white area is the pit trading, as pit traders like me would call it. So what do we see here? Well, not much on Monday and Tuesday. The market tried to rally on Monday without any real news, but China came out and they blocked Micron chips from coming into their country as a trade war response, and you could see that knocked the market down in here. So net, the market was a little bit down for the first 2 days of the week. Not a lot really went on. Here was the holiday, 4th of July, and you could see they still traded the futures, of course, because, well, it was our holiday, not the whole world's holiday, as we got independence from Great Britain. And now, when you look here at Thursday and Friday, the news really did pick up. There was talk of a deal here with Eurozone for the car tariffs that really has not come to pass yet. And China warned of instant retaliation if the U.S. Opens fire on the world with its tariffs, which they have done. Then what we saw here during the day on Thursday, well, the FOMC minutes came out. They rallied into the FOMC minutes, bounced around a little bit, and then closed strong. FOMC said interest rates to continue moving upward into next year. That certainly will invert the yield curve if they do that, and I think that they're not going to do that. So that's what they say. I think they're going to get nervous about it. Their concerns are the yield curve that they said, and the trade war, and a potential recession if that were to come, and inflation, which I say LOL to that because, well, there's no inflation, and they're concerned with the yield curve. Why are they talking interest rates to be up for the next year and a half or so? So I don't know, talking through both sides of their mouth. The FOMC really, to me, is confusing, and I would call them worthless. Of course, I'm a free market guy, and they are far from a free market part of our government. Yeah, they say they're independent, but, they really don't really act that way. It's the official start of the trade war here that you can see, and that happened as the markets sold off here overnight, but then news came out of the payrolls. They were up 213,000 versus 195 expected. The U3 rate pops to 4% on an participation rate increase. So there's more people that came back to the workforce. So that way the numbers work is it pushes up the unemployment rate to 4%. Wages softened a bit, and those have been disappointing. And you could see what happened to the stock market as it turned up on that news and never looked back here on Friday, as every person who's short, including me, watch this market climb on this news of the trade war and seemingly not even caring. Now, it's stalled the last few hours, and we only have an hour and a half left to the day here. I'm going to show you in the short-term view that I think that we're going to get some downticks in the coming week. But, again, like I said in here, it looks like this window for the market correction, based on my work, is closing with just a short number of days, couple weeks, still of a risk period. So stock market for the week, a wide range in how they participated. Up about the broad indexes, up about 1.5%, whereas the Russell up about 3%. So it was again led by small caps, the ones that really benefit the most from the tax plan. If you watch the Dow has been so sluggish, though it managed to get a rally going today, and the Dow is weighted by those stocks, like the Boeings or Triple M's, are the ones that are going to be affected by the trade war, and the lesser affected ones are the low caps and the ones that benefit more from the tax plan. So that's why we're in this period where the Russell is moving up that strongly. Now remember, historically, when the lower cap stocks lead the way, you're very close to the end of the whole thing, because, well, they can't really find value in the market leaders that they've had before, so they're widening the range of what they're willing to buy. That's actually a poker term, widening the range, and that is what lifts them until finally they realize that they've bought a lot of crap, and then the market starts to go down again. So the stock market getting solid gains for the week with this gain on Thursday and Friday. Bond market up about 3/4 of a point. Yes, up 3/4 of a point in the face of this stock market that's moving up. So there are people buying bonds, and the 10-year falls about 5 basis points, and the 10-30, the yield curve, which is the far out part of the curve, is only now down to about 10.5 basis points. So the yield curve still flattening, and the middle of the curve has a possibility of inverting in 1 or 2 more hikes. And I can't see how the Fed's going to allow that to happen. Here, with growth of the economy only at 2%, something is going to change in those attitudes. The dollar down about 0.4%, perfect with the patterns that we were looking at. You're going to see despite being wrong on the stock market this week, we got everything else right, and you'll see that on the short-term view. Gold up about $6. That's a very feeble bounce in the face of the rally that we're seeing in the stock market, the decline that we're seeing in the dollar. So very feeble bounce. Oil hit our target perfectly and then rolled over, fails at $75, down about 37 cents or so on the week, in a very choppy week, and we think that the best of the oil market rally has been seen, and I will show you more about that as we move forward. That's it for the opening segment, and we're going to be back in just a moment or so for the best and the worst stocks of the week. All right, for the best and worst stocks of the week, what I do is I look at cycle analysis. We're looking at the weekly charts, essentially, which is where the core of my cycle analysis is done. Cycle analysis, if you're new to it, is essentially a way to look at the rhythms in the market, essentially the heartbeat of the market, and that gives you a whole different sense of market awareness, a whole different way that we look at charts, because cycle analysis is based on time, being also based on shape of the movement. It's very, very different from most other types of analysis, and as I said, I think it gives you a great sense of market feel. The first stock I'm going to show you is in the biotech category, and biotechs are susceptible to massive moves if news comes out on specific drugs, and that's what happened in Biogen. An absolutely massive move here on Friday as they came out with favorable results in an Alzheimer's drug trial. Analysts all over this one upgrading it. This is really interesting because you can see in here cycle analysis showing you a big, what we call harmonic family right in here. And in that harmonic family that we're looking at, there was 3 cycles that made that up. You can see here 1 and 2 and 3. And typically when you get into where you're having a corrective process in a minor cycle and a major cycle, you get a big decline right over here. So that was perfect cyclicality. You can see the IBB, that's this one right over here, and how it aligns pretty nicely with BIIB. Now, what happened in here was that this pattern is quite negative. And that would bring an expectation that this would come up into the resistance area and fail. So in other words, this is the pattern you're looking at, and this would have been the expectation. That was really what we expected, because that would have been normal. However, when they come out with news of this great drug, and you know how important it is, all the people in this country, sadly, in the world, sadly suffering with Alzheimer's, then a good favorable result on a drug brings an incredible move to the upside in the stock. Up 19% on the day, up 21% on the week, and fabulous move. Now you can see, based on our projection in here, that this corrective period goes out into August. So it's likely to get up here, maybe even go through that resistance, and then roll over. But this area around 340, it tried to get back down there today. It pulled back. That really looks like the area that you'd want to buy the stock. So great news. It drags up the other biotechs. Now, get a good look at this chart, because what I'm going to show you is very valuable. When you get a move like that, it moves the biotech index up. That's the IBB. So it also drags up, in what we call pin action, some of the other stocks in the group. REGN is the next one we're going to look at, and look what this one did. So this one moves up, but it moves up towards this resistance confluence area, and of course that's much weaker than Biogen is, and that's actually a sell area right there. So this is getting the benefit of that trial in Biogen, which doesn't relate to Regeneron whatsoever, except for the linkage in the index. So that's why it's up, and that's why we believe that's a sale in that area. Gilead, a very similar situation right in here, where it gets a rally, comes up here to around that moving average right there. We'll call that the 34-week moving average. That's often an area that we see things move back towards, and you can see that here, where it got very far from that 34-week moving average, right over here, here's the 34 right there, then it actually pulled right back to it, and that happens very, very often in stocks. As a matter of fact, we recently did a video where we talked about the likely pullbacks in stocks that were way overbought, and stocks that were very far from those 34-week moving averages, expecting that they would get pullbacks there. And last week we talked about the fact that the retail stocks, they were in that group, and they were likely to be stocks that pulled back, and they hadn't yet. And now what we do is expect that they will be pulling back again. So this week, when I show you the worst of the week, I'm going to show you some of the retail stocks that are actually pulling back pretty significantly right now. And that's because they got really far from those moving averages. So that is a look at Gilead, a look at the stocks that are in the biotech category. The next category that we're going to look at right in here, and that is in the asset managers. So KKR had a pretty good upside move in here, and this is KKR. Sorry, I'm having trouble getting that chart up. Be right with you. I don't understand why sometimes these charts get hung up in here, and I do want to get this chart up for you right now. So, well, I'm not able to get all the drawings up right in here. So anyway, I'll tell you that the Apollo Group and the KKR, these are stocks in the asset manager category, and they have started to move up, and these are some pretty good upside moves. Now, I mentioned that Goldman Sachs and Morgan Stanley are stocks that we think that are getting into the final phases of their declines, and that is likely setting up some pretty good rallies. I'm still having trouble with my internet in here putting up these drawings for you, and it's probably going to give me an opportunity to do a little cycle analysis for you right in front of you. So here is the look at Morgan Stanley right in here. You can see that. So what I'm grabbing is the cycle analysis tool, and what I want to do is I want to identify the bottoms that you can see, like right in here. You see there's an important bottom right in there, an important bottom right in here, and an important bottom right in here. And you'll notice that the distance between the bottoms right here and right over here are pretty close. And now if you point out over here, you'll notice that that low right over here is getting close to that bottoming period. So what do I see in here? Well, if I use my cycle bracket tool and I come across and look at where those lows line up, as a matter of fact, there's another low right over here. You can see that our cycle analysis is showing that, well, here's the rally phase and here's the declining phase. Here's the rally and here's the decline. Here's the rally and it failed and broke the low right over here and then continued down. So you can see that there's a cycle bottom due right over here. Here's your cycle low here. Here's your cycle low here and here and here. What does that tell you? Well, when you get into these rising periods, well, that's this. That's here and this. Even though this one failed, it rallied for about 5 weeks strongly on the upside. And here you can see what we're looking at is the likelihood that it's going to turn up in here and give you a pretty big gain. So that's the cycle analysis in there as you look at in Morgan Stanley, and there is the real cycle analysis right there in front of you. Thankfully that popped up just in time for me to show that to you. So there is the lows that are due right there, and we think that the low is going to bring a rally as we have projected right in here. And Goldman Sachs right in here, you could see a similar thing. This is the red zone that it turned in and then moved down sharply, and there's really not any significant news that you can see in there. But when we have the moves in like Apollo, let's see if I can get Apollo Group up here. I can't. And there's KKR. That's not the one I was going to look for, though. I think it was BK. There we go. I'm having trouble in here, but you can understand that sometimes it goes wrong. Here's BK, and you can see that bottom forming in here, Bank of Mellon, and JP Morgan. Next one we're going to look at, and you could see the timing in here, ready to turn up also. And all of those are telling me as I put up the XLF, I'm just sharing some of my other analysis with you, that's also getting ready to bottom. So while the asset managers are showing some bottoms, then it also says to me that the rest of this group is probably going to be the ones to lead the market on the upside. Sorry I had difficulty getting those symbols I was looking for to come up. Well, now we're going to talk about silver gold. Now, the gold market, as I said, the upside move has been feeble. And this week the bounce came time-wise, well, even a little bit late, not able to make much upside ground. But the gold and the silver stocks are starting to get some bounces, and some of them have much better patterns than gold and silver do. So here's the GDX. I'm kind of expanding the things I'm showing you today because I want you to see the breadth of the analysis that we do. Here's the GDX right in here, and you can see that what we were looking for was, this corrective period to end and then get a rally right here, and you can see that upward tick right there. It's not very good, and the fact that it broke below that low is pretty negative. So we're not looking for any giant upside moves in here. Still, we got some upward movement in some of these stocks. Look at the upside move here in AG, which is silver, as it gets up into this little area of resistance. But this is a pretty strong pattern in here. here, and it still could make some upside ground over the next couple of weeks. It gains 10% on the week. AU in here, this one, look at the bottom that formed right in there, very timely. It has this really a morning star pattern in this big upside move. We're looking for about 950 in this stock in AU over the next several weeks. And take a look at Gold Corp GG, and that as that turns up, and you can see that upward sort of triangular shape that was going on in here, and now turning up right in this period. So we expect it to make more ground and probably get to 15.5 or better in GG. So pretty good gains in there. I think really investors are getting ahead, but the strong dollar is going to make them wrong, in my opinion, in that while you get some little period of rally in here, I don't really think it's going to last. One more stock we're going to look at, WBA. This gets a 5%, 6% jump on the week. It's in our sell zone right now. You can see the breakdown that occurred right in here based on the fact that Amazon is about to attack them as they bought an online pharmaceutical seller, and it gets this bounce. So it bounces up from 60 to about 64, and we think the stock is headed well below that $60 number, as you could see by our projection. So that is a look at the stocks that are the best of the week, and now I'm going to bring you the worst. All right, for the worst of the week, one stock that has gotten cremated is Tesla. Tesla is a stock that we have been bearish on, and that stock has been fighting that for quite a number of weeks, and now it is showing you that it is susceptible to some big declines. And we had raised our target up from 220 to 310 on the stock. In other words, when it was trading at 360, we still thought it was going to fall 50 points. And it did that. It actually fell down to below 300, and now we've had to lower our target again to about 272 based on the support areas that we see. So look at the massive engulfing pattern in here. Let's just look at this one big harmonic family right there. And you can see that actually what's really mostly dominant is this half cycle. You can see that right here. And look, it's turned over and given you a sell signal, and this decline goes out to September. Do you want to buy this stock? I don't think so. So we think that it's going to continue down and likely to get down to this area here around 272. So if you get a bounce in here, I think it's going to be a sell. I'm also going to put up the daily chart for you right in here. So this is where we do our daily analysis. And you can see in here that it got down to that 78.6%, giving you a little bit of a bounce on that hammer bottom. We think that it's still going to continue down for the next week, so any upticks in here are very likely sells. And we could easily see this stock falling very sharply out into the August period. Why do I say August? Well, this decline is going to end. You can see that right in here. Here's where we project the bottom. And then you're likely to get a rally. And this rally is going to be a screaming short right in there up until late July, beginning of August. And then we think it moves down. I want to wait to get short again in this area come late July. I'm not in a hurry right now. I want to get the best entry that we can in there. So like I mentioned, the retail stocks, they were holding up pretty well, and they were on our list of stocks likely to retreat. And this week they've done worse anyway, and we've got a pretty good retreat going on. DIX, DKS, is the leader, and I'm going to show you the weekly and the daily pattern in there, and you get a sense for why I think that actually DIX has made a important top. First thing we're going to look at in here is where are the longer term patterns and the cycles. And you can see in here, again, we're cycle analysts, so we're looking for market rhythms. And the market rhythms that we're focused on, you note that right here, it points to that low where those two nested areas are. Look at this right over here. The nested area points to the low. Here, the nested area points to the low. It was a little bit early, which is positive. A base was built in here, and we were bullish, thought it would get up into the fib target zone, which it did. And you could see it got up, just barely into it right there and then rolled over. So now it's in support. But there's a lot of resistance up there. You could see the evening star, the shooting star, and if I look at the daily chart right in here, look at this massive engulfing pattern right there and the breakdown. So the fact that it got under this low at 35.43 is bad. And it's likely to decline all the way out here into the end of July. So I'm going to go back to the weekly, and you could see that, well, this low points to September. So if there's a low on the daily chart that says end of July, what that says to us is that this declines into the end of July. It then rallies somewhere in here and then gets wailed on again after that. We think this all is pointing to a top. And remember, when it was way up here, we said it's likely to come back to the 34-week moving average. And you could see it doing that in what really is a reversion to the mean. GPS Gap Stores, a similar situation. It got really far to the upside, but not as far as some of the other ones, and now is retreating. It failed below that peak, which is what we would have expected it to do, and now is rolled over. So we think that Dick's down 8%, Gap Stores down 8%. Those are important highs, and we think that they have seen the best of it. UAA is a stock that we were just so bullish on. As you can see, that out of this support zone, we were screaming it was a buy, and it exploded up to, almost got to that inverted head and shoulders measurement right there, which was beautiful. Now you could see the corrective period that it's in. Now I want to teach you some things about cycle analysis. You'll note this here, this big base and these two cycles that made up the bigger cycle. Here's one right in here, and it's positive because it's pointing upward. Here is two right in here, and it's positive because it's pointing upward. Here is the first one right in here. You can see that. This has about a month to correct right in here, and then likely to get a good rally. So that's why this, on our swing high, swing low analysis, we have a video recorded on that, is our buy zone on the stock. And we think it's going to get into there in the next month and then likely move to the upside again. So still a bullish pattern in correction, and we're liking that one. Down 6% on the week. Dillard's DDS, another one in here that got way overbought. See the evening star that's forming in there? So we thought it was just late as far as turning over because it got so extended. We thought it would get down near that 34-week moving average, or very least the 13. So we're looking for 84 on this stock. It's now over 90, and that does look like a top to us. So that is a look at DDS, also on our list of stocks that we thought were likely to retreat. Other stocks in the group that we also thought were going to retreat were Macy's and Kohl's. Those are down 3-4% on the week as the retail group did get weaker. One more group I'm going to talk to you about in the worst of the week, and that is the gaming stocks, LVS and Wynn Resort. So LVS, not a pretty pattern in here at all. This stock had a gap down, and you can see that the gap is showing on the weekly chart, so that means the gap came on a Monday in there, and that is not good. Why is it not good? Well, basically you have a double top that's formed in here. It's slightly slanting. It doesn't matter. And when the second part of the top comes down and threatens the low right over here, then the measurement is from the here to here all the way down to here. And some analysts came out and said they don't believe the Macau numbers at all. And that looks to me like what we're going to get is based on the low do right here, a couple of more weeks on the downside, an attempted rally, and then rolling over and coming down into this area sub 60. You can see the stock has been immensely strong. I mean, it's found support at this area of the 34-week moving average, and now it's come down below that 34-week moving average. So overall, that is not a good pattern. And Wynn Resort, which of course had all the difficulty with Steve Wynn and the allegations of sexual misconduct, and you can see in here, note this turned into a red zone. It broke below this area. We had this as a yellow zone the whole way, and that was warning us that the rallies in here were not real, that they were likely to fail. Man, this held up for a long period of time, and now you could see our projection in here is that it will likely make a bottom just like LVS in the next couple of weeks. and then rally and fail. That's really what we're looking for, as we think that this group has seen its best and that it's likely going to be a sale. So if I were long WIN or LVS, as a longer term holder, I wouldn't bail here. We're near the end of this pattern and likely to get some upticks, but it's right in here in August if we get a rally that I think is the sell point. And I think both of them long term are really looking like bad stocks. That is it for the worst of the week. Not a lot there. And I want you to stick around because we're going to bring you our short-term view for the coming week. All right, short-term view for the coming week. What we're going to look at in here are the daily charts. And we're going to, as soon as I find my notes on the short-term view, there they are. We're going to look at what I said last week, and we're going to look at what we think is coming in the next week. Before I do that, remember, follow me on Twitter at askSlim and become a subscriber on our YouTube channel. We put this show up there, and we put a few other things up there that are really interesting. Give me a thumbs up if you like the show, and if you give me a thumbs down, make sure you tell me why so I can learn from your feedback. We always want to be better. And I want to tell you about our special. Now, if you really want to learn about cycle analysis, you need to get our charts and take our cycle analysis workshop, which we have on our site. But the special that we're running today on our charts is that you get all of the cycle analysis that we do on the thinkorswim platform. That's our preferred broker at TD Ameritrade, and the platform is outstanding, as you can see here. And you can have our charts on your platform, which we update regularly and send to you every single week. Also, you will get our rankings and trade setups on the 80 best traded symbols that there are. That's 56 of the best traded stocks, widely held, active option stocks, and 24 of the futures that we do look at on FutureSpeak every single Wednesday. So you'll get our rankings in there on intermediate, on long-term, intermediate, short-term, our option bias indicator, and the askSlim market condition indicator, and all of those on our charts also. You get all of that, plus all 300 of our videos that we have, 300 plus, that you can learn about in 8 categories of video, all about trading, so many aspects of it, and technical analysis, and trading psychology, and all about style, strategy, and plan, and stock groups and sectors that we look at. There's 8 categories, and you're going to learn just so much. Plus, our stock index report, which we update our analysis for those people that don't get charts and want to see our cycle analysis and trend and momentum indicators. And we update that on Thursdays and on the weekend often. So all of that, like I said, charts, rankings and setups, 300 plus videos, stock index report, all of that to you for just a trial for just $73.50. You'll be able to see it all for 1 month, and you'll be able to tell whether or not what we bring you on a whole will advance your education or not. That's what we really want to do, is improve who you are as a trader. Our analysis, yes, you will get that. You'll learn from it. We're going to be wrong. We're going to be right. More right than wrong. But overall, you're going to just learn a ton from what we share with you. $73.50 for a month for all that information. If you don't use thinkorswim and you still want to get our rankings and setups, all of our videos, the stock index report, you can try all of that for 1 month. That's level 3 for $48.50. That's the trial for 1 month. Fantastic. Write to me, slim@askSlim.com. Let me know if you want to have the trial for level 4, which is the charts and everything else, or level 3, which is our rankings and setups and everything else. And I'll be glad to send you those links, and you'll be able to try it for a month. If you don't like it, just cancel it. I'm fine with that. Or maybe you just stay at a level 1 member or level 2, whatever fits for your needs. But you're going to learn so much, and that's what's really is important to me. And I really want you to be part of our whole family here. So make sure that you write to me, slim@askSlim.com, and I will send you those special trial links. Level 4 or level 3. All right, so now what we're going to look at is our short-term view for the coming week as we open up our charts on the daily chart. So I'm going to put this up on a 2-year chart because that's where we get the more perfect alignments in here. We're going to put up a 2-year daily. Sorry, wrong chart again. There we got it. So here is the chart for the light crude market. We'll start right in here. So light crude and the dollar, the euro, the gold and the bond market, everything almost was perfect analysis this week. We're going to get 80% for the week. Now, those of you that only look at the stock market are going to say, what good did that do me? Because we got the stock market wrong. So everything else was right, and some of it so right it was incredible. So 80% on the week, which is really strong, and the stock market is the only thing that we got wrong. And I'll show you all of that. So here is light crude. Now, we expected light crude would rally up to about $75 and fail. And you actually see that it did that. And as a matter of fact, you have this evening star pattern that formed right in here, and that is what made the top. It came down, tested this area right over here around 71.50, hit that rising support zone, and then bounced up again. However, you can see in here that the pattern is suggestive that it's going to be a down week. We see momentum is up. That's right there. That's the slim ribbon. It turned bullish right over here, and it brought you that big rally. So when the momentum is up and the projection oscillators oversold, as you can see right over here, we look for a little bit more uptick before this rolls over. So we're going to look for a little bit higher and then coming down like over here. And we're going to look for a test of between 71.50 and 70.70 here in the next week or week and a half. We think that today's rally is part of the short squeeze going on in commodities that's lifting it, and we think that all of them are going to pull back in the next week after today's short squeeze day. So we're going to look for a down week in oil and testing that support zone that you can see right there. The bottom dark green one is what we expect it to get supported. The top one is always between the 38.2 and the 50, and the bottom one is the 50 and the 78.6. So that's how we put them on our charts, and you can see the tremendous value that there is when we do that, and that's based on swing high, swing low analysis using the cycle points to tell us where to measure from. And make sure if you take our trial, you watch those videos. There's a couple of them there in the tools for text category. So we're going to look for a down week in light crude. Next thing we're going to look at is the dollar sign DXY, and there is the chart that we were looking at and looking for a down week. So you can see we got that. We thought that it would come down and get near 94. It actually got down here to almost perfectly 94, hits that support zone. You could see based on the pattern in here that this looks like it's got another week to go or so on the downside. It could approach 93. We'll call it 93 to 93.30 really is what we're looking for down over here, and that's probably the end of the corrective period for the dollar. And like we said, we're likely to get a nice upside move in here in the dollar starting in late July into August, which isn't really going to be favorable for U.S. assets if the dollar keeps getting a lot stronger. So little peak right in here, came down as we expected. We're going to look for a down week over the next week. I want you to note that after this period right here, you could see the slim ribbon turning positive, that you got that rally from 90.5 all the way up to 95.5. And today it turns neutral. So this is the first time we've seen a neutral reading in all of this period of the last 3 months. And it's going to need to recover from that in order to be able to get the upside move. And that just shows you that, well, we're in this corrective period. The opposite of this is the euro currency, which I always show because /6E, because some people trade it as the proxy. So if we're looking for another week in the dollar on the downside, we're looking for another week in the euro on the upside. And our upside target is going to be that it approaches that area of 119, maybe 119 and a half. So that's this resistance confluence area right there. That's based on multiple peaks that bring us those zones, and you can see in here that was pretty close to where that resistance was, and it's probably going to get up into that, up near 119 again, and then we think it's going to be done and move back to the downside. So we're looking for an upside week. Again, you will note in here that after a very long period of time, where right over here the slim ribbon said the momentum had turned negative, had brought you that big decline from above 124 all the way to 116, it has now neutralized. So the momentum component to this, which was pushing to the downside, is not there at the moment, and that's going to help get some upside movement, as you can see right there. We're looking for an up week in the euro currency and testing that area of 119 or a little bit higher than that. The next thing we're going to look at is the gold market. So this one we got correct also. However, it didn't quite make the upside that we were looking for. What we said last week was that we thought that it was going to move opposite the dollar. The dollar would move down, and it would then be able to move up. We thought it would test the area of 271 to 278. It only got up to about 163. 1271. It only got up to about 1263. So it didn't quite make the upside that we expected, though we expected this turnaround right over here. And again, we're going to look for this area right over here, the resistance area. The bottom of it right over here around 1268, the middle point right there around 1276. So 1268, 1276 is the upside target for the week. That is not very bullish. You can see in here that the slim ribbon has been very consistently negative from here at 1340 all the way to falling here at 1240. The slim ribbon is the greatest, in my opinion, of the momentum indicators, and it will keep you in moves. You can see that it moves up to the slim ribbon here, right to the resistance zone, and then collapses again. So we have negative momentum readings in here, and that's very likely to keep it from getting very far. Also, I want you to note that the projection oscillator right over here is overbought, so it's going to have a really hard time. Maybe it pulls down a little bit and then tries to get up there, but this is not bullish stuff that we're looking at here. So we're looking for an up week in here, dip first and then rally, and that is not overall a good pattern that we're looking at all. So got the first three correct, and ZB is the next one we're going to look at. We said it would rally to 146, and it rallied up to 146.12. Very nice, nicely following the patterns in there. And then it kind of backs off and gives you this doji that you could see right in here. Let's just trace out the minor cycles. You can see this one right here, this one right here, this one right here, right? Those are your minor cycles in here. And then look how they traded. You can see that one almost perfect, this one almost perfect, nice, right? This one bullish, and then makes a what we call bullish configuration pointing upward in the buy zone. It then rallies in here and has this strong, what they call right-hand translation or swamping. That tells you how strong the market is. That's why we thought it would get to 146 or higher, and it did that. So all of that acting perfectly. What we expect in the next week is a test of that high 146.10 or 12 right up here, up to the potential near 147. You can see we have it projected up that way, and then do one of these. So there's been kind of a decoupling from the stock market and the bond market, both up this week, and so the inverse correlation has gone at the moment. So I can't really make a judgment based on what I think, because I think that the bond market still has upside, whether or not that truly means that the stock market has downside. So for the S&P 500 last week, we said that we thought this would be a down week. We thought that it would test the 2670 support area, and we keep raising those supports up because of the way the market's been acting, and now we're going to raise it up again. The expectation was that it would be lower into after the holiday, that would be able to hold up before the holiday, which it typically does, and then selling would come in after the holiday. Well, you can see that was completely wrong. The what happened essentially was that everybody's attitude was similar, and there were a lot of shorts out there that thinking the trade war was going to happen because Donald Trump's a hardliner, and that did happen, and everybody was leaning and got caught leaning, and then the market rallied. And my sense for the stock market this week is that it's likely to begin the test of the recent lows, but the recent lows are higher than what our target was, and that is likely to give us only some modest decline versus major decline that I was expecting. Now, for our members, you're going to see charts here that are different than the ones that I sent you just a day and a half ago. And the reason for that is because when we do cycle analysis, we look at the shape of movement to help us understand the shifting energies that are in the markets, and the shape of the movement today with the rally became very clear. So what happened was that the broad market started to follow the pattern that the Dow had been tracing out, which is not usually the leader, but now we have that happening. And now you could see that there's a better alignment. There were things that were really off, where the S&P pattern was off from the Dow pattern, which was off from the NASDAQ and the Russell, and now they're back to a good alignment, which is, makes me happy in one sense and unhappy in another because of that big rally day, which gives me clarity and gives me a little less money. So what I see in here now, and you can see this 14-day pattern here, 14-day pattern in here, we got a lengthening in here, which brought it to where that Dow low was. You can see right here, which was a 22 days. So we essentially shifted out this way a little bit, and that now has us in a better alignment. What does that all mean if we can get through the gibberish that I just gave you? Is that we're this cycle here that we see, when that bottomed right over here, right at the top of the support zone, it was a much stronger case than I had given it credit for. And now it's gotten through the 61.8 and is up nearing that 78.6%. So that is around the 2770 number right over here, 2772 we'll call it. That looks to us like the area it would roll over and be done, and then have a test of the low. What's happened is that the intermediate patterns, which I don't show on this show, only for our members, we had been projecting a bottom in mid to late July. Now, this bottom on the weekly pattern looks like it's declared itself as the ultimate low. That's going to mean that this area here around 2700 is a worst case if the market is going to test that low in this pattern right over here, these coming down right here. That would bring you a failure right in here, 2770, 2775, right in that area. And then after that, test the low, and then get into this area here, which is what I talked about, a better summertime, where we have a much better chance of moving up. And this is where I think the financials are going to really catch fire and have some very good rebounds. I think the financials are the next upside leaders in the market. So we're going to look for this next week for a little bit higher prices, and then to fail, give ground around that 78.6%. If it were to continue in here, and if it were to move through that level and close significantly above it, testing this high, well, then this scenario is gone. And what it says is that the weekly cycle low that occurred right over here is dominating, and that then you'd get a pattern that was more like this, and then that summer rally moving up would be happening right over there. So this is not, they might go up or they might go down. This is it going to be a pattern that's like this that's bullish, or a pattern that's like this that's bullish. Yes, what I'm saying is that the intermediate patterns are giving signs they're turning bullish, with only a week or week and a half, we'll call it a week and a half period, where this window of downside risk still exists. And there still is time for this to fall over this next week and a half, but outside of that, I think the time period ends, and then we get into a better period. And again, I think that is led by the financial stocks. So we're looking for a rally that early part of the week maybe that just doesn't hold, and then get into one more period of market decline in here before the better period that we're looking for. That is it for everything I'm going to bring you today. I hope there was a lot of value for you in what we shared. Please write me, slim@askSlim.com, and ask me for those 1 month specials so that you could try everything out. I think that you will be amazed at the amount of information that we give. Our members are always writing me about that our service is just so comprehensive, and there's actually so much more coming. We're working on some new services and products that are going to really blow you away. So there's some big things coming for our level 3 and level 4 members that are it's just going to be outstanding. We've been working with somebody writing algos for us right now, and you're going to be excited when you get to see some of the new things that we're bringing. So that's it for the show. I want you to be so careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to sit